All right, good morning, everybody. How are we doing? Sound good enough? Okay, guys, welcome. Quick disclaimer here. Welcome to FX Bootcamp, non-alert service, no trade recommendations, but this is a webinar, so we're going to concentrate primarily on education today. Thanks, Dave. All right, so we got 45 minutes. I had some stuff sort of roughly planned for today. And then I'll throw it open to the floor and we can talk about a few things. How many of you, so in my trading development, I'm not saying I'm a perfect trader by any means, but in my trading development, one of the sort of revolutionary things I did for myself was have a daily chart up at all times. All right, and I don't mean, everybody starts kind of trading on one screen, on one laptop, etc. Right, this is correct, Boyke. That is what I said. That's an astute observation. So, so everybody starts sort of trading on a laptop with an extra screen or a PC with maybe one screen. And one of the big problems in Forex is a little bit of information overload. All right, and what I mean by this is, what are all the things you got to look out for when you're trading? I mean, if you're gonna trade a euro-dollar pair, what do you have to look at to trade a euro-dollar pair these days? All right, so you've got to look at, relative strength, and moreover, relative strength in terms of the sustainability of the relative strength, right? Tea leaves. And, we'll throw some cards too. You got to look at intermarket stuff. You're absolutely right. But how about the multiple time frames just for that pair? All right. So when I'm looking at a euro dollar, okay, even though it's the simplest currency, so to speak, in terms of just the level of complexity involved, think about all the stuff you got to look at. Dollar index, relative strength for that prevailing hours and days moving forward. All right, is it going to change, or is that prevailing relative strength going to continue? All right. You also got to look at the longer-term support resistance, the euro pound and its technicals. You got to look at maybe some Swissy stuff to make sure you haven't missed anything there. The relative strength of the majors on the whole, and then you can only start to really take a fractal view of what you're doing on a euro-dollar chart. Right, so you have all these different inputs if you're doing it properly. Okay, so you have all these different inputs, whether that be the relative strength or the intermarket or whatever. You have all these different inputs. However, the daily chart, okay, so when I was learning technical analysis, I would always start with the 4-hour, go to the daily, right, mostly out of ignorance. Okay, so just lots of information overload. All right, and I always used to go to the 4-hour chart, then maybe flick it to the daily, and then kind of come back to what I was doing. All right, and I figured that by the time I had got all the way down to, say, a 15-minute level, I'd really forgotten that it happened on the daily. So I needed to come up with something. That reminded me of what's happening on the daily chart, because guys, even on an intraday basis, if you're a swing trader, you need to look at a daily chart. If you're a medium-term trader for like trades that you're lasting 2-3 days, you need to look at a daily chart. If you are, in my opinion, a scalper, you need to look at the daily chart. I'm not saying execute your trades with the daily chart. All right? I'm just saying that the daily chart keeps you grounded. Okay, it keeps you grounded. So today at FX Bootcamp, we were bullish. So bearish, I'm sorry. So let's look at some daily charts. So one of the things that has been helpful, oh dear. Sorry, is that freaking out the camera? One of the things that really accelerated my technical analysis skills. Hope that didn't just absolutely catastrophically freak out the camera. Guys, is your camera blank or we good? Yeah, that's very naked. That's naked as the day I was born naked. Okay, so let me show you this. Right, so this is something I have on another screen. I have a few more up there. And, you know, here's a euro-dollar chart. Okay, I know it's not a perfect presentation, but I'm a trader, not a talker. All right. So here's a couple of daily charts. Okay. So we were bears today, and I wish I could tell you I caught a lot of these moves. I had price going up just a little bit higher, but still. Why would we be a bear here? Okay, for starters, the biggest piece of advice I can tell you is have daily charts up on another screen all the time. I don't care if you're swing trading, carry trading, intraday trading, or scalping. Have a daily chart up at all times. Don't just flip to it. Have it up there. You can stare at it all day. The reason why I say that is because your daily chart is going to give you an entire day's bias. This, to me, in terms of the mechanics of how to learn to trade, somebody said this to me, and it, you know, I didn't really think about it, but once I instituted it, you'll be surprised. It's the small stuff that makes a difference. Having a daily chart up in your face at all times. So if you're saying to yourself, well, I look at it, I'm good enough. I'm telling you that's not good enough. Put it on permanently, so you have to look at it. Fair enough? Okay. Because honestly, when I log in for the day, what am I saying here? Right. What am I saying? I'm saying, fine. I'm at the fib of the drop. I'm at resistance. I'm expecting a red candle. It sounds a whole lot like a trade plan. We haven't even done anything. We haven't even done anything. All we've done is say, well, I'm expecting a red candle. You know, here we had little higher lows and stuff. I actually had it coming up higher. But I said on this pound, I was like, well, I'm expecting a red candle. I think I had 155 as my target. I'll show you this. I'll show you our trade plans. Okay, and on the euro, we were sort of over here, which I thought we could come up higher. So I had us making a wick, had us kind of making a wick here, and then red. So I was 65% right on the euro. About a B plus on the pound, A minus on the Aussie, and about a B minus on the euro. But you know what? All of them bias. That way. Purely based on what I expect the next candle to bring. What a profound concept. And could there be anything more simple? Now, if you don't know what the next candle is going to do, then start scrounging around and find something that does resonate with you. Okay? All right. So how many of you actively look at a daily chart to begin your days? All right. So what I'm going to do is we're going to do a 3-week. We're going to do a 3-week and a 3-day trade plan using the daily chart. This last trip to ITC in Barcelona was a lot of fun. The FX Street folk are special people. One of the big things I noticed was a lot of strategies are reactive to the market. Now, if that makes you money, fantastic. All right. But a lot of strategy is very reactive to the market as opposed to being proactive. Okay, it's a little bit like playing soccer, I guess, is now the applicable time of year for that. And it's a little bit like the defense not really having anything planned, but just allowing the offense to run at them. And just perpetually run at balls, put balls to the middle, bring it up with the wings, cross it up, just perpetually, and then you're just reacting to balls coming into your zone. As opposed to having a defensive strategy. And then lose on penalties, yes. Okay, as opposed to having a strategy of, well, I think we're gonna move these guys around here, and then we'll shut that down by pushing those guys forward, and we'll take the counterattack there. Okay, it's very different. So my trading, I like to predict the market to the best of my ability, and then when the indicators complement what I'm expecting, we go trading. Not the other way around. Not, I'm going to follow the indicators and hope they're true. I'm saying, I'm going to follow my technical price action, and then when the indicators are congruent, we do business. Make sense? Okay. So to do that, you need to know how and where price turns. All right, so let's look at a couple of daily charts. Have any of you tried this, by the way? How many of you folks, and this isn't a belittlement by any means, I'm just trying to get a feel for read the room here. How many of you folks trade on an hourly chart and lower? Okay. And tell me roughly, this isn't and guys, you're never going to have me say one thing is better than the other. I hate that stuff. You'll go on forums and it's, oh, you don't know what you're talking about. Look at the longer terms. You don't know what you're talking about. I trade a 3-minute chart. I know a guy in Southern California who makes $100 million a year trading a 3-minute chart. Who am I to tell him he's wrong? It makes no difference. But say some things to what are the benefits of trading a shorter term chart? Consistent returns or faster returns? I guess faster returns. More trade opportunities. It really is, in my mind, it's what kind of fits your personality a little bit. Sure. My idea with the shorter term stuff is that it's a building block for the longer term. So you can use those fractals around those turning points for an hourly, 15-minute, shorter, that kind of thing. That you're never really gonna put a whole lot of stock in a 4-hour chart or a daily chart. Okay. Now, okay, so I think if you've got this, right, I see it as sort of 2 dimensions here, okay. So let's look at the green as the short-term dimension. So we'll call it hourly charts. Oh dear, hourly charts down. Sorry for the writing, I'm running up the weird little rodent here. Okay, hourly charts down. All right. In other words, hourly 15, 10, 3, 1, or whatever. 5, 1. Okay, and now we'll look at this side as the slave will do that. Now we're going to look at this side as the daily chart. Okay, this is daily and 4 hour. Okay, if the daily does this, breaks up and then it kind of comes back to the bar point. All right, this we'll call the green zone of the rise. Okay, that is the green zone of the rise. Everybody cool with that? Previous support, fib, might be psych level, central pivot, etc. Okay, this green zone, for me as a medium-term guy, even a spot trader, would dictate probably 2 days worth of price action for me. Because what's going to happen on the 4 hours, you're going to come down like this. Bottom out, bounce. Right, good trade long. Okay, toodle to the downside. All right, bounce, long. Okay, good. And now you have 2 very good longs. And why are they good longs? Why are those high quality H2O longs, to quote Waterboy? Because they're kicking off the major trend. They're kicking off the major trend, the daily support. This is, these little cells here are little trampolines. This stuff here, coming off a daily, is like being shot out of a cannon. This is like a tomahawk coming out of here. Where this stuff here is like 5.56 rounds. Okay, you with me? So, if we're looking at this Aussie has a lower high right now. All right, we're on a daily. Okay, we got a little lower high going. And I challenge you to try and predict how this is going to work. Right? Remember our 3-week, 3-day trade plan. Okay, so what do you think? We made a lower high. All right, let's get a good zoom out here and see what we got. And guys, the free room at FX Bootcamp, all you got to do is log in. And I do this stuff every day. You might get something out of it. All you got to do is pitch up. It's free. I'm there for an hour. Okay. Okay, forget this trend line. I'm not happy with that. Okay, now. Here is our daily chart. Good, thanks, Spin Doctor. Right, and what do we know about this Aussie? Okay, if we take a fib, we could take a fib here of the entire drop. Anyway, I don't know what's happened to my fib tool. Seriously. It's just freaking gone. Oh well. Alright. Old Ganish. That's alright. That's very weird. Okay, anyway. Look, we don't need this. Alright? We can imagine fib levels. Okay, tell me, in the context of this whole thing, this is an 8-hour chart now, but just tell me where you would find the bulk of the buyers and sellers. Okay, just eyeballing some stuff. Right. A selling zone, am I right? Selling zone here because of this. Selling zone there. Okay. Obviously, we have the swing fib sell zone, which has gone off of. Do you guys see how I generate these zones? This here would be the move fib of the entire rise plus this double top. So that's how we generate this massive job. You with me? That isn't just me sniffing an area. No, that's a serious turning point. You guys get that? Follow along with me here. It's important. Okay. So far we've got major red zone. We've got shorter term red zone. We've got red zone based on the swing of the drop. Okay. Now we're in buy zone land. Okay, and where's the other buy zone? Here. Why? That's the fib of the rise and these previous swing highs. Okay. We've very quickly worked out our major turning points of these trades, have we not? AKA support and resistance. How have we done that? Just using visual support and resistance, a little bit of common sense, a little bit of Fibonacci, a little bit of this is how it works. Do you guys think, looking at a chart like this, you could determine these 50 to 60 pip buy and sell zones on a daily chart? Realistically. Anyone? Sure. Okay. Right, now what you do is, once you have these points in mind, you can insert your shorter term price action. So let's say price is tootling up here, hits this major red zone, the 4 hour is going to look bullish as heck, it's going to look like this. Oh, it's just a chart I took on here. Okay, it could be a daily chart. Right? 4 hour could be doing this, and then all of a sudden you start to see a base out, and it starts to make a lower high. You see stochastics rolled over. Give that a shot. Why is that a proposition? Because it's come off your daily support. That's why it's attractive. That's why it's meaningful. Then you're saying, fine, until it proves me otherwise, I'm going to take it to the next support. Great, where's the next support? Here. You start to get price action changes here, parity, etc., previous support, swing, fib of the rise. Great, you're probably going to see a bounce that takes you to a fib of the drop. Well, now you have an intraday long spot trade for 50 pips. And so on and so forth, ping down through that, off to the next major green zone, which is the green zone on the entire rise, and guess what? You can come all the way back to that red zone and do the same thing. By working out these daily areas of support and resistance, and not support and resistance. Okay, I think that this is what I saw at RTC too. A lot of skilled people there, but a lot of those that need a little bit of help. Is that working out areas doesn't necessarily predict anything. Once you've got your areas worked out, you still then got to sort of extrapolate that across how you're going to trade it. Okay? So if I showed you something like, let me try fun. Heck, I don't know, give me a pair. Let's have some fun with it. Give me a pair here. Something decent, please. The loony bin. Haven't looked at a CAD thing forever, but okay, let's look. Alright, here we go. Okay, daily chart. First things first for us. Major resistance level. Bang it in there. Right, kind of up here. It's definitely a zone now. I mean, I'm sure this, you got chopped off here, but this is resistance zone. Okay, what did you say? What did you say your upside bias is here? I just gave it to you. It's clearly in a little uptrend, isn't it? But running into this buzzsaw. Okay, so let's zoom out a touch. And what do we notice overall about this pair? This is a pair that was very bearish, now very neutral, and now trying to resurrect the uptrend. Is it not? I think the Loonie is going to be one of the best carry trade vehicles over the next 6 months. And where's our major red zone here in the weekly? In here. In here. Okay? So it seems to me, why would that be the next red zone? Well, it's this previous stuff, and it's the fib of the drop. So like the mid 101s is the red zone. Big time. Okay? Okay, so we'll call this area, call that area as sort of the major short zone. Alright, we've got some medium term stuff here and a double top at this point. Alright, now let's go back to our daily. Okay, so what do you think? What do you think is the medium term plan here? Right, where are red zones? Red. Why is this a red here? Why would this be a red zone? Swing high, lower high potentially coming off a significant rise. I do see Loonie for a carry trade. Got to be careful about the timing of it, but yeah, I do. Got to start to see a little bit of inflation here in the States, and interest rates will rise. You're going to short the bond market, buy the yens, buy TBT, get rid of gold, things of that nature. And save a big bag for gas money. Alright, anyway. So, red zones. Okay, now, where is our green zone? Do you know how that green zone is generated? Because it's a fib of the rise, and it's this hesitation area. Okay, and then below that, obviously the double bottom. Alright, so let's plan this out. Does everybody understand how these zones are created, or has that got you completely and utterly baffled? All I'm using is support and resistance, Fibonacci levels, they don't even have to be specific, previous hesitation areas, and anticipating where it is going to buy and sell. And if you break these areas, because we print an entirely preposterous too much amount of money. Yes. Just from a cash flow standpoint, Rob. Money is going to be pouring into yield. Pouring into yield. Where do you find yield? By leveraging it against the Swissy, and the yens, oil, nat gas, yield. Okay. So anyway, so let's predict this out. We're going to bounce here roughly. Okay, probably nudge up a little bit. head down. Little swing for breads on there, but shouldn't really impact anything. Then green. Now what do you think could happen here? A bit of green. Okay, another double top kicks in. And the double top kicks in, and we make a visit down here. That doesn't mean the downtrend is taking over. After this, you're going to start to stack your way back up again. So in other words, down, down, okay, green zone support, proper up day, that takes you to the double top, and then that pushes you down. Daily chart predicting based on support and resistance. Any thoughts there? Okay, so if you are at resistance at a market open in a downtrend, you're going to see a precipitously down day, much like we saw today. Aussie absolutely at resistance, market open, R2, and it's shorts for a mile. If you are, counter trend, but at support, you're going to just have a funky day to the upside. It's not going to be great. So it really just depends in the context of the prevailing trend. That makes sense. Well, the thing is, Boyke, is that when you're taking a counter trend trade, I look for a scalp, little quick spot trade. I don't particularly look to, try to make 50 pips. If I'm trading with the trend and I've traded off resistance within the context of the trend, I'm trying to leave some stuff. Yeah, so the mechanics of taking the trade are the same to keep the risk limited, but I identify launch points on the daily chart. I identify launch points on the daily chart that I think are going to be valuable for turning price around. No, Aussie and Kiwi are going to be great. I just think that Aussie and Kiwi are still going to be lingering and still going to be dealing a little bit with the cold of London, right? I mean, of China. China's got flu. Maybe Aussie and Kiwi get a cold a little bit, and I think that'll linger them a little bit. But CAD, the Canadians are pretty rock solid up there, and inflation relative to the yen shouldn't have any problems. Okay. Any questions? And it's as simple as this. If we did a couple of models, right? If we had, say we had a chart that looks like this. Okay, and it kind of shoots off. Tell me about the price action here. This is a live candle. Tell me about that price action. You guys know you're trading. You don't have to do any analysis. Just tell me what could happen here, or probably mostly going to happen. Yeah, you're probably going to end up with a candle that looks like this. Okay, and on a spot trade basis, maybe a 15-minute does something like this, and you short that outside the daily, and now all of a sudden you're doing this, trading it that break down half of the daily candle. Well, once again, the plan is really deciphered off the daily candle. So trust me, guys, if you are trading only shorter terms, just do yourself a favor and have a daily around. You will thank me. Okay, what about this one? Right, three greens, red, red, green. What color would the next candle be? think about it, because we just applied these buy and sell zones. I would think it would like to be red. I would think we'd see a small red. What do you think that is? You'd go up initially and then turn red. Well, this is resistance. The lower high area is resistance. What do you think the next green candle would bring? Maybe something like that. All that's happened is it's come off the little fib of the drop and said, right, I'm just going to make a higher low and join the party here. And off it goes. How often have you seen that? A lot, right? Yeah. But it's much nicer to just understand it. And if you're looking at the data, you're saying, oh, okay, well, it makes sense. It makes sense. Okay. Anyway, guys, got any other questions? I'd like to continue this with you next time. I have some more things to cover, and I'd like us to look at a few more examples and then actually break down some charts today. I mean, just have them on that one screen, Jamie. Just dedicate that one screen to them. You talk about stretching them across like your desktop and stuff. Yeah, stick them on one screen, you'll be happier. No, well, you can adjust, Santos. You adjust. I mean, I might do a 3-day plan, and then one day's price action will impact the next 2. So then I'll just do something else. Based on where you have been at support or resistance, and then trying to predict, right, I'm going to bounce off support. This is where we're at. Probably see red here. Guys, and it's not an exact science. I'm just saying that, if you can, with some semblance, understand what the next daily candle is going to look like, you've basically broken the back of your trade plan. You know what to expect for the most part. Yes. But what's more important is your buy and sell zones on those daily charts. That's what you need to look at. And guys, I'm going to be publishing a little newsletter every day. So the idea is that I'm going to do a 3-week trade plan, a 3-day trade plan, and an intraday trade plan. And we're publishing that at 6 a.m. London time every day. All right? And I'm going to do live trades on it for accountability, but then it's basically going to be an analysis letter of what I'm looking at, and I will only trade the plans that I've laid out in there on a live account, and you're going to be able to see the results every day. All right, it's going to start out as a free thing, but my idea is that people, it's going to be so good, is that people will actually be able to read this, learn something, and make trades from it as prescribed and be profitable. Okay, I know there's a lot of similar things out there on the web, but I'm going to start like a 6-week trial of that. All right. So keep an eye out for that, keep an eye on my Twitter, etc. Yeah, you'll like it. Anyway, guys, thanks for having your time today. Not a complicated one today, but I'd happy to come back and actually expand a little bit more here. I'd like us to, at one session, I'd like to have the opportunity to just sit down and break the charts down from start to finish as I would every day, and then actually force everybody to come up with a trade plan and see how they put it together. Okay? Take care, guys. Talk to you next.